our presenters. And just to clarify, we're sticking to the schedule, correct?
Yeah, we are still
No,
10 minutes.
So Borislav will be our first
Yes,
presenter.
yeah.
Yes. Thank you. So Borislav, he's currently an associate at Alpha Real Capital. Previously, he spent 2.5 years at Towers Watson, where he last was an investment analyst. Before that, he was an actuarial and risk consulting analyst. And I mean, without further ado, I would like to welcome him on the stage so he can present his his take on it. Thank you.
Thank you. Yeah, sorry for behaving in a true Bulgarian fashion, turning up fashionably late. I was going to mess up the schedule, but I did it in the end. So, I don't actually know what we're supposed to be talking about, but I'll talk about, I guess, what I've done.
We always talk
Yeah, so effectively, I mean, my degree, I studied in King's, I did management, but I found it not to be, I found it really interesting theoretically, not as practical. Oh, sorry, sure. So then I kind of liked the numbers. Finance was kind of a natural choice. It can be quite corporate, so quite rigid. It can be quite entrepreneurial. Depends what you do. So I started out at Towers, which is a really big company. I actually interned with them after my second year in university. So that was kind of a role in risk. So we were doing quite a lot of insurance risk. So trying to quantify insurance liabilities. I did a bit of pricing, so how you actually price insurance policies, which was quite interesting. That's part of the sort of general insurance umbrella, because insurance tends to be split in two, so they divide into life insurance and non-life insurance. I did the non-life stuff, which pretty much everything else apart from life insurance. Some interesting projects. I was researching space insurance, so that was quite cool. So that's quite a peculiar branch of business for most insurers, because they tend to apply really rigid sort of quantitative models and statistical models in order to price their policies. So car insurance, for example, everyone has a car, everyone has to insure it. They have a lot of data, it's really robust data. Space, you don't know. And if something happens, the losses are quite massive and wipe out quite a lot of capital. So that was quite interesting, but I just found that path sort of really scientific and quite honestly, people are quite geeky, which is not bad, but it's just a really, you start out your career and you know where you're going to be in 50 years and you're going to retire comfortably. It did not float the boat. So then I internally transferred to do investment risk. So that's more of a pension fund context. I maybe should ask, do you know how insurance companies and pension schemes kind of operate?
Yeah, they screw us up.
Sorry?
They screw us up on a daily basis.
Yeah, well, I think actually they screw themselves over most of the time, just themselves, because they don't know what they're doing. So effectively, if you think about a normal company, you have the asset side and the liability side. How much time do I have?
We have 10 minutes.
Right, okay. So
We
really
have
good.
5 minutes for questions.
Okay,
You can
cool.
talk about whatever.
So if you think about a normal company, it has an asset side, it has a liability side. So on the asset side, it owns some assets, some cars, some flats, let's say, something, and it's there. Which, similar to the pension fund and insurance context, they have some assets, they have some money basically, because it's a financial industry. So their assets are money that they hold on their balance sheet. So that's what they try to invest. But the way they quantify their liabilities it's not certain. So if in a normal company context, you have a bank loan, right? So you need to repay it. You know exactly how much that loan is. You know how much you have to pay every month, what your interest is, so you kind of know what you own. With insurance companies, because anything that they own is actually to their members or their scheme holders, but the events that could trigger payments are completely uncertain. So someone dying, you don't know whether you're going to die today, tomorrow, after 12 years, in a life insurance context, for example. So to actually quantify the liabilities, it's a really kind of complicated process. So you need to do some projections, make some assumptions about mortality, for example, really cool stuff. And that's how you put a value on them. So that's the kind of background. So again, quite quantitative, quite scientific. this industry has been around for centuries, so nothing really exciting happening there. And so the only exciting stuff is kind of regulation, but the exciting stuff happens on the asset side, for me at least. So after being for 2.5 years in the company, I actually recently quit, and then went to this startup. So I actually followed like quite a similar route. So we're now out of a company that was 14,000 people, so you're kind of a cog in the machine. We're now 80, and like 50 people are kind of just sort of, they do sales and they try to push like this one product, so they're not really kind of part of the core team. My core team is 5 people, who actually themselves started about 8 months ago. So 2 senior guys, I'm younger by 20 years, I think. So they know what they're doing, but we do absolutely like so many things. So we do investments in property, where we buy an asset but then restructure its cash flow. So the income that asset produces, so a property, in a property context, would be rent or lease payments, and then we restructure those payments so that they're insurance and pension fund friendly. Because again, it's kind of a background. These companies, they have to make regular payments. They tend to, so a pension scheme has to pay someone that's retired like regularly. So they need to kind of meet or try to meet their liabilities through investing and generating return on their assets. So that's one thing. Another thing is we just do pure insurance restructuring. So one insurer wants to get rid of some liabilities, but then and then meets another insurer, and then we kind of structure the whole transaction. So that's quite interesting again. And finally, what else do we do? We tend to do pretty much any deal. So lately, one of the latest products that we've done is it's called equity release mortgages. Anyone heard of them? Yeah? Oh, cool. Yeah, so an equity release mortgage, if you think about, you own a house, and you've paid your mortgage, so you fully own it. But as an old person, like you want to pass some money to your family, or you kind of, you want to still live in your house, but you want to cash in on it in some way. So what you do is you go to some bank or like Goldman Sachs, and you tell them, okay, I have this house, it's really great. I still want to live with it in it, but can you get me some money? So they tend to structure this deal where the bank gives you money now. You don't pay any interest, like you don't pay anything, you just get cash in hand. And then whenever you die or retire, they go to like a care home, the bank repossesses the property, charge that interest. They charge interest, but you're not paying it, it's accumulating. So as soon as you either die or go into retirement, they sell the house, take whatever the loan was for, take the interest, and then give the rest of the money to whoever the property is passed on to. So that's equity release mortgage. We've done that. We've built on some models to value that. Quite a lot of insurance companies are interested in them because, again, there's a big regulation now with the European Union, so the insurers can't just hold any assets, because if it's too risky and it fails, they won't be able to pay their policyholders. So they're really kind of risk averse. But this product is actually quite good to them. It wasn't clear whether they could hold it or not, so we were involved with quite a lot of deals on that. And that's pretty much it. I don't want to bore you with too much sort of financial talk. I'll be more interested to kind of take questions and try to answer them. So, yeah.
So is it your fault when people don't get the pensions then?
Not really. See, that's the thing. I was in a consultancy, so I was just advising. I was never actually responsible for anything. It's a junior role. You never actually tend to get to make the investment decisions yourself. You kind of build up your knowledge. So I'd like to take your question with a tongue-in-cheek to next.
I have a question regarding the same field that you used to be part of. So you said there's not many exciting parts of the work now. What do you think about kind of the increasing use of genetic data that people start to accumulate themselves by doing tests like running 3D and ways of them testing themselves, and then insurance companies wanting to use this data in order to, as you said, to estimate this risk of life expectancy,
Yes.
and I don't know how it's incorporated in
Yeah.
the financial model that is. after the design. But this, I think, it will be a really growing field at the moment. Lacks the legislation, lacks the amount of expertise or the enough experience with the type of data that actually be linked to the insurance companies and to the legal aspect. So do you think that this is anywhere near being actually important in insurance policies, or is just still too kind of sporadic as cases at which it could be applied?
So I've
seen one field, so.
to be honest, I mean, I've seen other similar fields, so I'm guessing it's more an issue for life insurers because they would want to. Anything that improves your knowledge about your customer base, first of all, makes you able to charge lower prices because you can. The more accurate you can price a product, the better for, first of all, the consumer because it will be cheaper. So they'll know, for example, who's healthy, who has some genetic illnesses, so the risk is. So it's all done with the end goal of kind of improving accuracy of pricing the product. So lowering the cost for those that are healthy and are like lower risks, and increasing perhaps the cost for those that are less healthy. So I guess that's kind of
but
the data that they're using.
How would you know what I just say that I want to share with the insurance company that
are you
found
talking
this
about
test
the
and I
ethical
think-
issue?
Yeah.
Oh, okay, well, the ethics are, the ethics are, I think finance is surrounded by, really unethical people, and it's kind of, it's always a decision on the balance, but I think if you don't want to give your data, then clearly, you don't have to, and I'm sure like the legislation will catch up with that. Whether they now do it covertly, I don't know, because this, to be honest, this is the first time that I hear that they're doing that. I'm not surprised that they're doing that though. But I do think that, with insurance, the biggest problem is sort of moral hazard. So I want to get insurance. I know I'm a reckless driver, but I go and then say, oh, okay, I don't have an accident, and then you like the insurer has to pay my pay on my policy when I crash my car. Whereas someone who's really responsible, actually, the insurer doesn't have any way to differentiate. So they'll misprice the policy, so it's more expensive for someone that's a perfect driver and less expensive for someone that's reckless. So in that respect, it's probably better for the consumer on a more aggregate scale. Now the ethical issues, I think that when the technology kind of grows and it evolves so that it's more mainstream, then people will be more aware about the risk. So if you don't, it's the same as Google, for example. Like Google collects all information that whatever you're doing. Is that ethical, or do you want to use your free Gmail and whatever, the free Facebook? It's the same issue. It's actually the same issue. Because consumers demand, but they need to, there's no free lunch.
But the beauty is that you can lie from the insurance company, but your genes won't lie.
Exactly.
So if they make you share this information with them, then you're basically screwed. Because you can always find something that might say, oh yeah, he's in that risk group or this risk group, and then you have to pay millions because we have something there.
So
that has been an issue for a long time, especially the ethical part with especially cancer mutations, which are especially for some Ashkenazi Jews, for example. They're susceptible to one particular mutation, one particular cancer, and I studied in undergrad, so 7 years ago basically, about the fact that insurance company can actually use that and they can charge them more because they're more susceptible to cancer.
But there's still no legislation. They
Yeah,
can't
there's no
request it.
legislation,
You don't have to share it. So there's no really anything to force you. It's just like your own data, such as if you wish to test your lactose intolerance and you wouldn't tell anyone.
Just to kind of answer, I mean, they can do that for sure. They can probably charge you. Like I'm not disputing that, and I'm not trying to defend insurers. What I'm saying is, first of all, you have to bear in mind they are operating in a pretty competitive market. So actually, for some insurance policy, for example, car insurance, insurers have been making ridiculous losses in the UK for the last 10 years. They don't make any money. In fact, they lose a lot of money with car insurance. But you have to make sure that you kind of take into account context. So they operate under like really intense competition. So there's thousands of insurers in the UK they can go to, and then if someone charges you much more, you'll go to the next one. So it kind of ensures that, to a reasonable extent, the price of your insurance policy is kind of kept to some reasonable level. Now, what you don't want to get is, so again, with car insurance, for example, like they have this thing called telematics. So it's in your car and it follows what you're doing. So if you're driving really well, and kind of don't break the speed limits and all that stuff, that just immediately lowers your requirement. Insurers can't clearly cling onto any single small thing that is in your genetic sort of predisposition. So I'm not a genetics expert, I don't know, but every single person probably is prone to some disease, right? They can't just bump up the price for everyone, because they'll just get themselves out of the market like that.
I think we have a question in the back as well.
My question is kind of different. How do you see your further career? Would you like to stay in this company, or rather establish a startup?
Yeah, so I made a very conscious choice. So I was working for a big corporate. When I said interesting things aren't happening, I meant like as an analyst in a big company, you have to follow like a very rigid sort of career path, and I wasn't necessarily agreeing with that. I just thought like I might as well go out and like establish something of where I'm on the top myself, right? So where do I see my career? So I took a big risk, because in the big company, on the flip side, you have quite a lot of security. I mean, you're paying reasonably well. I have given it like a year and a half to 2 years to see whether we'll be successful, because actually for the last 2 months we haven't really made any money yet. But it's an expensive business to be in, because they're paying my salary, they're paying like other people's salaries. But I'm quite confident that we'll be doing okay. If it doesn't work out, I'm out of a job, so I just need to find another job. But once you build, the good thing with the UK is once you build some experience. In fact, the fact that you've gone and tried something and taken a risk is probably a good thing on your CV as well. And you have learned, you have that past experience like in 3 years now. So it's not like, it's very, very, very difficult for a student to find a job. It's really difficult. Much more difficult than if you're a professional, you've worked for 2 years and then something happens, you get fired, but you can find a job really quickly because you're trained up. Where I see my long-term career, I don't know. Like if this thing doesn't work out, I'll do the next thing. I have no idea.
One last question.
Sorry.
No, that's fine.
Most big insurers have in-house legal teams, so I was wondering, the startup, how do you deal with legal risk? I imagine you don't have an in-house legal team.
We hire lawyers. So so for example, on the property side, any deal that we do, it requires quite a lot of rigid like documentation, because we do commercial properties. It's not like actually even buying flats is a nightmare actually here. But just you have to. I mean, if you don't have a legal team, you hire lawyers. So yeah, we just have a contract with a legal team.
Thank you very much.
Thank you.